Hello and welcome to Low Investor. Let's go over our stocks first and then we will take a look at the market and what to expect for next week. So on my previous video, I was saying that I'll only add any if we get close to 1.8, and we can see today the lowest got to 1.8, but then I didn't get it at that price. I got it at about 1.87 in the morning. As for Mara, it didn't get to the 22, early 22, and you might have noticed that I got hot. And the reason why I didn't average down on Mara is because remember I was saying that on every day when the market is going down, I would rather open up a position on a new stock. So when HUT goes up and it turns green, then I can sell it for cash and with a little bit of profits, and I'll use that cash to buy something else. So that's why I got into HUT instead of Mara. So let's take a look at NASDAQ first. So the past 2 days, although it dipped down a little bit, but it had a quick rebound. But today it closed below the 50 days moving average. So a technical standpoint from day chart, it doesn't look that great. But if we zoom in at the 30 minutes chart, we do get some kind of divergence between the price and the RSI and MACD. And the triple bottom shows some strength. And at the same time, the 10-year bond yield is near the long-term downtrend resistance line. So as you can see, so this resistance line has started in 1987. As you can see, every time it touches, the bond yield will pull back by a little bit. And also this time, I also think it will have a little pullback, because if you see the previous time, every time when it touches the downtrend line, you also see a spike on the RSI. So in here, the RSI is about 66. In here, it's about 70, 67. And you can see every time when it touches the line, it has a spike up. And this time you see the RSI is going up as high as 72. So I do think when it touches the resistance line around 2.8%, it should have a little bit of pullback. But if it does not benefit TAG, it might benefit the bond price itself. So you might consider getting some bond ETFs in the short term. Traditionally, the 10-year bond yield and TAG has a inverse relationship. So as you can see, when the bond yield comes down, the TAG goes up. But there are times that the bond yield and the TAG is going up and down at the same time. And especially nowadays, the market is really difficult to navigate because there are quite a lot of uncertainties. So if this triple bottom provides some sort of a support, and if this time when the bond yield comes down a little bit and it will benefit TAG, so on Monday we may see a little bit of rally on TAG stock, but I don't think it will close above the 20 days moving average just yet, and possibly closing near the 13,900 zone. And if that little rebound does happen, I may still have position and maybe a little bit of any if I'm at break even. Because right now my any average price is same as my original buy-in, which is around 2.1. Because on Tuesday when the CPI data released, and it will be based on the March data, and as I've explained in my previous video, the inflation percent will probably be more than what we had before. So that data release might drove the market down further, unless people are pricing in tomorrow. So in that case, we might see the market tank a little bit more tomorrow. So they'll be pricing in the inflation data a day ahead. And as I've explained before, my next bigger add-in will be around 13.3k. And if people are pricing in, and when the data release on Tuesday, we might see a low open on Tuesday, but then I think it will quickly rally back up as people already priced in the CPI data for this past week. So my plan is, if NASDAQ goes up, I'll sell my recent add-in. If it goes down, don't add in yet and wait for the CPI data to release to have a low open on Tuesday morning. But a few interesting things to point out on yesterday's market is that the VIX is also down along with S&P and NASDAQ. Usually when the VIX is down, the market will be up, but on Friday, all three of them dropped. So if you're hedging against yourself, you're still losing money, so which is kind of weird. And the other thing is the bank sector. So for example, the KBWB, which is the ETF for banks. Now, if you're really expecting the Fed to raise hike with like 8 times or 9 times a year, now usually when the interest rate goes up, it will benefit the banks as they can make more money for the no interest. But you can see the bank sector, let's say the bank ETF, or let's say Wells Fargo and Goldman Sachs, they're actually coming back down. So does this say something that they don't expect the interest rate to go up that much? And that will be in line with my point of view on the rate hike, which I don't think they will be that aggressive in the May or latest in June FOMC meeting. And by then, we should trigger the final bull run that I was always expecting before the true recession comes. And that is also why you see me adding in aggressively on tech stock at the moment. So the CPI data that will be released in May for April data might be eased off a little bit. And then the next FOMC meeting in June, they may turn a bit dovish on their rate hikes. But until then, I think the market will be very volatile and maybe range bound the major support resistance. And if we are able to catch the wave, we will be making some nice profit in between. And lastly, let's talk a little bit on oil since we were on it on the last few episodes. So this is in 4 hours chart, so you get a few candles per day. And on my last video, I was saying it might consolidate for a little bit before it reaching up high. And the reason why I said that is because the CPI data will release on Tuesday. So when the inflation percent is higher than the previous one, people will probably flock into the commodities again, such as oil. So tomorrow on Monday, we might see a little bit more of the consolidation until the CPI data release on Tuesday, which people will jump into oil, making the oil goes up to the resistance. And we may also see a little breakout testing the previous high. So if I go in reverse oil when it touches the resistance, my cut loss would naturally be when it passed through the previous high. And if I enter in here, which I would feel more comfortable, my cut loss would be at the previous high at this line. So this is it for today. If you like the video, subscribe and do the like button. And I'll see you guys next time.